All right, so we're going to go over everything that we just learned. So one thing I want to go over. So when you look at a stock and choose to trade it or to invest, you can tell that this is overall in an uptrend, right? And this is in this major trend. You're going to see bottoms, tops, uptrends, downtrends, pullbacks, pumps, whatever you call it. So the key point in all of this is we have a survivor bias because technically every stock on the stock market right now most likely is in an uptrend since inception. Now, you can't type in Enron, right? So when we type in Enron in the ticker, because that no longer exists, that's not data we can pull. So when you look at stocks and you start trading, you're looking at it from a perspective of survivor bias. That means you're looking at surviving stocks. So I just want you to keep that in mind. So the overall trend is an uptrend, which this will usually be the case. So what a uptrend is, according to Dow, is you put in a high and then a higher low, a higher high, higher low, higher high, higher low, higher high. So this is a uptrend. Now, what will break this uptrend is if we have price break down below this low. So that will cancel out. And so we're in a primary uptrend. So for this to be a dead stock, the price right now should be down here. It should be below this price. So that is the rule. And if you use a fractal time frame, right, you're going to see more detail. So you might see a more pronounced uptrend and a more pronounced downtrend. So right here, you have highs and lows, right? So you'll see another secondary trend that is doing the opposite, right? So for a downtrend, we have to have lower highs and lower lows. For an uptrend, we have to have higher highs and higher lows. So those are the rules. Those are the rules. So when you're looking at stocks and you're analyzing them, you always want to start out with the highest time frame. I use the monthly. You can use the 2-week time frame. But from what we've learned from Charles Dow, we should be able to pick out any stock and identify what it's doing or what it did in the past. So we can identify on Ethereum that we are currently, let's draw it out. That is a higher high. That is a higher low. That is a higher high. So for this to be true, right? So we're having higher highs, higher lows. So for this to be a true uptrend, what can we expect? Maybe this. And a continuation. This would continue the trend. Now the price can fall to this level and still be bullish. It can still be bullish. But for this to truly be an uptrend locally, right? Because we switched, it has to continue this path. Now, we can also be accumulating. So this could be true as well. So we could still be in a sideways range or an accumulation. That could be true as well. So in order for this to continue an uptrend, we cannot break the rules, or we cannot break this low. And so you should be practicing that. You should be going through any chart. You can make up a chart, and let's just pick something random. Let's pick A and B. Let's look at that chart from the monthly time frame. Right? So as you can see, this looks like a lot of sideways price action. And if you pull out a line chart, you can obviously see that we are in an uptrend, right? And we came down, we had a pullback, but you can obviously see we're in an uptrend. This right here, you might not realize whether it's in an uptrend or downtrend, right? But you can see it was kind of sideways, right? But overall, you know, we went from a sideways market or accumulation and then into an uptrend. We can easily identify that. So let's do SPX. So I like the S&P 500. It is very clean, very clean. So we'll go to the daily time frame. Now we're going to start with the COVID crash. So this is the pandemic crash. And then from here, let's try to identify when we truly entered this uptrend. So right here, when we broke this high, we returned to an uptrend. All right, so these are the rules. Right, we kind of did this, but we continued on our merry way. Right? We continued on our merry way, and I'm not going to draw it all, but look at that. You can clearly identify that according to Dow, this is an uptrend. On the inverse side, right, we can clearly identify that this is a downtrend, right? We had a high. And what triggered that downtrend? As I'm marking this, what triggered that downtrend? And this is when the trend kind of reversed, right? What triggered that downtrend is we broke this low. We broke this low right here, right? So we had zigzag up and then we closed below it, right? And then we started this pattern. So if you took a trend line and you drew it right here, right? That would be an uptrend as well. So you can use trend lines and you can say when we broke that trend line, it is a sign, but the only true way, it could have came down here in reverse and it would still be an uptrend. So the only way that the rule is broken, Dow's rule is broken, is if price comes below this line right here, then we are no longer in an uptrend. So this right here, according to Dow, would be a downtrend. And let's do it this way. So we had a pullback. We had a downtrend pullback, and we almost came to pre-pandemic levels. But you can see we had an uptrend, we had a downtrend, and then what happened? We'll just do this. We have an uptrend. So that's what we're able to identify. That's basically the Dow theory, right? The market moves in different directions. So we're gonna go over and we'll choose this chart. So we're gonna go over pivot points real quick. And there's many ways to draw these. We're just, for this example, we're gonna take areas like this. So this is obviously a point, right, that I want to know about. Because in the past, if we look at the pandemic, right, in the past, that was our high, and we may have hit resistance at this level and been able to trade it. Or actually, this would be it right here. But so we want to mark these levels, and you also want to label them. And it doesn't matter what color you use. Monthly, and I like, when I do top-down analysis, I like to put my monthly level label on the top. So another level that we can be interested in that hasn't been touched yet is this level. Right, so if I want to long in the future, I want to know the other parts that reversed. I want to know the pivot points. And we kind of have to stretch the chart out a little bit. And we're not going to use this level, but I kind of want to just demonstrate what happened. Because we're just marking support and resistance. I'm just doing that. So when you're marking your levels, you start from the top and then you work, we'll start with the weekly. And as you can see, that previous level, we had a rejection off that level. Price went down. So we had a reaction. So right here, this was probably a level 2. So if you look right here at this pivot point, it lines up. It lines up with this being a reversal in the future. So that's how support and resistance works. So we're going to refine our level. And we're going to look at the weekly. And this is going to be extremely difficult. And we're going to label this weekly. And I like to have it on the inside for the weeklies. And you can't see the writing, but it's there. And we'll go back here. And as you can see, the weekly and the monthly coexist. So that is a pretty good level. Weekly, right? So we have a weekly and a monthly level. Same right here. If we go back, we can probably label this, but I'm just using this as an example. This right here, we have a tighter tolerance on the weekly. So you can probably guess what I'm going to do next. I'm going to go to the daily. That's right. We're going to go all the way back. All right, so we have a tight daily level right here. That is very tight. Let's see what kind of reaction we got with a refined level. And I apologize, this is taking so long. Let's try to scrunch up this chart. All right, let's label it daily. And we won't look at that yet. We will refine this level as well. So it looks like the daily level, I like to label anything that was not touched. So let's do right here. Let's pick this one right here. And we will do so you can use these boxes. We can go down here. We'll do it. We'll just do it. We'll look at the daily level. And it looks like this right here will be the daily level. There's probably an easier way to do this. I'm just giving you an example. So when you look at these areas, right, you can already see that this is probably not as good of as a trade, right? Because you have to have a lot more risk to enter this trade. Right, so if you enter the trade right here to here, you're probably going to have to, that's a 1-to-3 ratio, that's okay. So you're probably going to have a wider margin of error, unless you're actually watching the chart and you see the transition. But what will your stop loss, just generally, I'm just telling you this, is a point in which you are wrong. So if we broke this level, I would say we are no longer in that bullish trend or uptrend. This will prove me wrong. So that is a little bit more risky than this short would be, right? Right, this short could probably be a little tighter. Right, you have a tighter tolerance here than you do here. So you can just observe that with pivot points. Now we're gonna see what actually happened, and I use the 4-hour a lot. So as you can see, if you zoom in and you were looking at the 4-hour, we tapped off the monthly, right? And that's the body of the candle. This is the top wick. So we rejected, came down, and then we had another attempt in this area. Now, the golder the area in this example, the more confluent. So it's in a monthly, weekly, and daily resistance level. So these areas have higher probability than just a daily being by itself. And we'll give you an example of a daily level being by itself right here. So here would be a daily level by itself. And let's look on the 4-hour and see if we got a reaction. It kind of just poured through that. It kind of just, we had that daily level and it poured through that. So we can stretch this one out. on the 4-hour, and we can see that we had one reaction. This was the best reaction, obviously. And then we had a third reaction. And in an uptrend, if you identify an uptrend, most likely this is called counter trend trading. A lot of people start with counter trend trading, and they will start shorting as soon as possible. Like as soon as they think the level is going to be tapped, they'll enter a short. I counter trend trade. I do. However, I'm very tight about my take profits. I'm very tight. So I would probably, let's pull this over. The last candle will probably be my take profit right here. So I'm very tight about counter trend trading, but this is just to explain what we went over, right? So we just made some lines on a chart, right? And this is how you make support and resistance. That's all this is. So we had a reaction. This right here would be an area to look at if price came down, but I just want to show you we had a reaction. We are at all-time highs right now. But yes, we had a reaction on this level. It turned out that that previous pivot point got a lot of confluence. In the area with the most confluence, with the weekly, monthly, and daily, we had a strong reaction. And that's what we're trying to capture. That's it. And I will go over how to trade with the trend. Trading with the trend is very, very simple, right? But if you're trading with the trend, right? Say you took a long because you saw this gap on the daily time frame. You're like, I'm going to enter long right here. It is important to identify these levels. It is important that price, you need to know where price will stop. So if you're trading with the trend, you might want to pull out that trend or that trade when we hit this level. I short this stuff. I short it, but that takes a lot of practice to short against the trend. It takes a lot of practice, and it's just, I do it for fun. But if you are riding the trend, you need to know these areas, because this is a good stopping point to pull out of a trade so you don't get greedy. Now, you might wait until we break out of this level and move up, and then you can ride the trend again. You don't have to short this. You don't have to enter shorts. That's what a lot of people think. If the trend is strong enough, you can just exit your trade. If you entered a trade right here, exit right here. If you entered it right here, exit right here. If you entered it right here, exit right here. You know, so that could be a strategy. This is a little bit of my strategy, but I'm just saying everyone should be aware of these levels. Everyone should know what support and resistance is. Every trader, all the good ones, like Rob Hoffman and his inventory retracement strategy. Rob Hoffman uses support and resistance to exit trades. He uses it to exit trades or enter trades. So he might see the trend reverse and enter that trade off of this support, and he might enter it right here. He might enter it as soon as he sees price go right here, and he will write it and exit here. So he uses the inventory retracement to enter his trend trades. So I think every trader should know what pivot points are and what support and resistance are. So you're able to identify this is a downtrend. And what would have given you an idea that this might be a reversal. That price may come down to this level and reverse. You can try to identify that. If you don't know why it happened, look at it, right? So we had a monthly level right here. We had a monthly level right here. We had a weekly level, right? And I would use this as the weekly level. Let's look at the daily. Right? You had a daily level right here, right? So price came down to this level. So that could have been a hint. It could have fell through and came down to this level, but it didn't. But if you saw the trend develop and you entered a short, this area would be a level you would consider taking profit out of. This area as well is an area you might consider taking profit out of, as well as this area. So that's just something to keep in mind. I'm not saying trade against the trend. You have to be very careful if you do it. Like years of trading. Trade for 10 years, 5 years before you trade against the trend. But you can use it. You can milk some profits off that. Just when you trade against the trend, be warned. Be warned that may not give you that much. It might be a weak pullback, right? But this area is a good area of confluence. This just proves that support and resistance can work. It tends to work. So everything you learned using technical analysis, the news, the talking heads on TV and all that, you can do very simple things and figure out where price is going and where it may stop. And you can have a rule like this is a 30% probability if I only have a monthly level. If I have a weekly and a monthly, it's a 60% probability. If I have a weekly, monthly, daily level, that's a 90% probability, right? But you always have to prepare for that 10% chance that I'll just go right through, like a big candle, like a big gap like this, just that 10% chance that just launches through that level. But as you can see in this area, right? This area acted as a resistance, right? Let's see if this area acted as a stopping point. Did it? I guess you can say that, right? This right here, this resistance flipped into a support. So these levels, like this right here, this pivot point, right here. Let's squeeze that chart. Right here. We had a reaction off that level. You can try to scalp that, right? Or you can just say, okay, I'm going to enter when price goes down, re-enter for that trend ride. Ride the trend, ride the wave. So go back, pick out any chart you want and just make some levels. Look at pivot points, back test it, see if these pivot points react. Remember, this is probability. They don't have to. The rule isn't they have to react at these levels. They don't. It just gives you an idea that, hey, maybe I should pull out when we get close to this. Or maybe I should look into entering a trade when it hits this level and it breaks the trend, the downtrend, the local downtrend. Maybe I should enter when we break the downtrend because it hit a support. Let's see if this follows through. So that summarizes everything we went over. You should be able to do all this on your lonesome, and we will get into the nitty-gritty. I will teach you what I do in later videos. All right, stay the course. Enjoy.